but be mindful how you use it. Credit 101. So far, we've looked at budgeting, debt, and saving. All important concepts when it comes to managing your money and building wealth. And through it all, we've spoken about paying off loans and credit card debt. But what we didn't cover, at least not yet, is how you can use your credit score to your advantage. When it comes to making big purchases like buying a home or financing a business, knowing and understanding your credit score and status is essential, especially if a certain score is required to qualify or if you intend to use some sort of financing. So since this concept can be so important for building wealth, let's start right at the beginning. Your credit score, or credit worthiness, is used to determine your eligibility for pay-to-use services like a cell phone contract or your apartment rental, and is used to determine your interest rate and credit limits on your credit cards and loans. Some employers may also use your credit reports as a determining factor when considering you for a job. Your credit history is a record of how well you've paid your bills in the past and is used to determine your credit score. Financial institutions like banks and loan brokers report the amounts of money you owe, your track record for making payments, and any delinquencies on your account. Then, various credit agencies use this information to determine your credit worthiness or how risky it is to loan you money. A credit report, on the other hand, is documentation of your credit history over time. This is basically a record of everything in your credit history. In the United States, there are 3 major credit bureaus: Equifax, TransUnion, and Experian. Their main job is to collect your credit information from various sources, aggregate them into a report, assign you a credit score, and make this information available to your potential lenders. Beginner tips for using credit. Up until now, we've spoken about loans and credit cards as bad things. You don't want to go into debt and not be able to pay back what you owe. Not only do you spend more of your cash on interest payments, but you can negatively affect your ability to get good interest rates in the future if you're unable to make payments on time. With all that, though, there are ways to use credit to your advantage, and that all starts with maintaining a great credit score. When was the last time you checked your credit? Is everything on your credit report documented accurately? Are all your bills being paid on time? Are you aware of any delinquencies? You should be able to answer all of these questions about your credit at any point in time. This way, you know your status before you apply for loans. Knowing your credit score and what's in your credit history will also help you identify credit fraud or identity theft and resolve it if it happens to you. This is very important to catch early. Leaving issues like this over a long term will ruin your credit and can be a royal pain to fix. Remember, you should use credit wisely and to your advantage, like for a home loan, getting a cell phone, renting an apartment, or acquiring business financing. These are all uses that will most likely benefit you now or in the future. Avoid racking up credit card debt, which over the long term costs too much and benefits you very little. When it comes to your credit, the key to maintaining a great credit score is to never miss your bill payments. Avoid paying late or paying less than the minimum required. For credit cards, plan to pay your balance in full each month. If you're intentional and objective about the way you use credit, you'll be sure to maintain a great credit score. This gives you a great advantage when it comes time to negotiate interest rates on all kinds of credit, including your credit cards and your mortgage. Keeping on top of your credit report and consistently checking to ensure the information is accurate will help you mitigate problems with identity theft or credit fraud. Now that you're clear on the basics, let's get into the details of credit scores. Credit scores. Your credit score is a grading given to you by your credit bureau based on your credit history. It's used to help lenders determine or predict how well you will pay your bills in the future. Basically, if you have a high credit score, that shows you've been reliable with your payments in the past and that you're likely to be able to handle increased credit. If your score is low, it shows creditors that you haven't kept up with payments or you've misused credit, so you are more of a risk. Let's look more closely at the factors considered.